With the growing number of loan apps in the country, the federal government, through its Federal Competition and Consumer Protection Commission, that's the FCCPC, have approved 173 digital lending applications to operate in the country. For more now, let's talk to Mr. Babatunde Rikera, CEO of Federal Competition and Consumer Protection Commission. Join us right here in the studio. Great to have you, and I'm happy you could make it regardless of that incredible traffic we have coming this way.
It is quite difficult.
Thank you for going through all that stress. But now let's look at these loan apps. They've been tagged a number of names. Some have called them loan sharks, and we know about how they name and shame and all of that. And now a good number of them are getting approvals. 119 got full approvals, 154 got conditional authorization. Can you run us through the process? So
what it is that when we intervened starting end of 2021, when we created the joint task force between the FCCPC and the other agencies, we developed a process, and the first intervention was raids in March, and then subsequently in August last year. And what we've discovered is that there were so many apps that you have 173 who have met the limited and interim guideline and framework. It's actually a scale down from the sheer number that we're operating. And so what we've done is to create this limited framework, which is interim, as it says, to at least figure out who these people are. Prior to that, we didn't know who they were. There was really no way to track and trace. And many of them were actually operating outside the country, mostly from China. And all they had were just the apps here. And even the tokens for operating their bank accounts were resident in people's hands outside the country. And so that has stopped. And the 173 that have been registered are people who we know where to find. They have a policy. They have a loan recovery policy, interest calculation policy. And then they have a commitment not to abuse people's privacy by taking information they shouldn't take off the phones. And secondly, by not informing third parties or using abusive language in how they recover their loans. Is this still happening? Yeah, to some extent it is. It's certainly not as bad as it was before, and we'll just continue our enforcement work. But now it's easy to find them. Before we were able to conduct the first strike, we took 3 months even trying to investigate where to find the businesses. But at least that's not the case anymore.
Well, quite incredible operating outside the country and, giving out these loans. And you wonder, it's quite risky, giving loans to people you don't really know, but they still go about it. Then they have to now, go through that whole naming and shaming process if, you don't pay. But, looking at, where we are, right now, is it possible that the ones that have gotten approval, at this point, what's the process of making sure they don't still, go through that whole process?
Well, so what it is that, businesses, whether licensed or not, have a certain set of rules to comply with. And even when they have those rules, sometimes there are violations of the rules. And so that a business has been registered or licensed under the framework doesn't mean that there will be no complaints, or sometimes they won't violate the rules. But at least the rules are clear, and they've subscribed to the rules, and we know exactly how to find them. So if someone says that, look, I got an inappropriate message from X company, we know exactly where X company is. We're able to look out for them. And then for the ones that just send nebulous messages without identifying who they are, we said you cannot even approach without disclosing who you are. And so there's some of the rules that have been put in place so that we can regulate the space better. And I believe we will.
And I know recently I did get some messages for some contacts on my phone, and this new tactic I saw was the person that actually borrowed the money. They said the person had HIV and escaped from the institution where they were holding the person. Then another message follows through apologizing for that. Is that because of all this processing we're seeing right now?
So I don't think that itself is a strategy. I think what must have happened is that it's quite likely that the company where this happened is one of the companies that's before the FCCPC. And perhaps a message had gone out, but realizing what that message was, this was in order to withdraw the message, because it's taking them time to percolate the policy all the way down. Many of them just recruit people in their hundreds just to come and recover these loans. And some of them actually outsource it to agencies that have people who do it. So it's taking time for them to literally get all their people to understand the new landscape and comply. I mean, and that's one of the things we've said to them, that we would not give you any amount of time to figure this out, because people on the other side are victims. And so I would say that more than likely that was an error, something had gone out and they needed to recall it. Because if it became a pattern, if what they were doing was first of all send out a defamatory message and try to withdraw it, it wouldn't pass the regulatory muster. If that was reported to us and we'd seen that it was happening the first, the second, and the third time, we would absolutely take action.
And, you know, at the end of the day, you know, both parties are involved, the lender and the debtor at this point. But how are they, you know, protected as these digital lending apps? Because, you know, most people collect these loans with no intention to actually pay back.
And that's a very good question, and an important question, because we also have an interest in making sure that their business can succeed. And the reason why we have an interest in making sure their business can succeed is that there are vulnerable people in the society who, that gap, people who cannot, don't have collateral, and the traditional banking institution, lending institutions securitize their loans. And so these non-traditional methods are important for the most vulnerable people. And so we intend for the ethical ones to stay in business. However, the rule to stay in business cannot be to violate the rights of your consumers or customers. And so they have to develop a business model, do their risk assessment and risk analysis, and be able to tell. I mean, you have a credit bureau that allows you to figure out if somebody is a chronic debtor or a responsible borrower. And so they must be able to go through that, not just this easy way of harassing people and getting money out of them. One of the things we saw with the harassment and the defamation is that all it didn't improve the lending situation. What it simply did was to create more victims out of single victims. And so when someone is being harassed, he goes to another one, he borrows money, and so it just became a vicious cycle, which at the end of the day, I mean, the entire industry will still come crashing. It's just that you make your money, you live for the day. And what would really work best is an industry or an ecosystem where each of these lenders is able to develop some information about the potential borrower and know whether there's a responsible borrower or not. The more performing loans in the ecosystem, the stronger and more enduring the ecosystem would be. So if they take advantage of the credit bureau and the credit institutions, where they can report those who have defaulted and they can check the credit of those who are applying, I think that would make some significant progress. And the technology is there. The credit institutions should also step up their technology so that these things can be checked instantaneously, and so that you don't throttle or slow down the speed of commerce.
And definitely, you know, the interest rate is another issue, you know, for most of these, you know, lending apps. This regulation, does it, you know, have to do anything with, you know, how much they actually charge, you know, for interest? Because I've seen cases where you're taking about 600,000 now, you're having to pay back about 1-point-something million, you know, over 100%, about 100%. So is there any, you know, regulation on that front? And
I think that ultimately the landing point for this ecosystem would be some regulation of interest rates. But we at the FCCPC don't have the expertise for that. That's something financial regulators like the CBN do. But I'd say this, interest rates are a function of risk. It's a risk assessment thing, and they're using very sophisticated technology to determine who's eligible for these loans or not. So they have to do more work. They have to do more work and look at people before they decide. And one of the reasons why the interest rates are high is because, look, in the event of a default, there's really no way they're not collateralized, there's no security. But you still have to do a lot more work to make the interest rates reasonable. Right now, we have a sense of what we think is absolutely unreasonable, but we're not regulating and capping and saying what we think it should be. But what we consider unreasonable, we ask questions about. What we focus much more about is how you calculate interest, whether you're compounding the interest, whether you're adding default amounts to the principal and calculating interest on that, because there are lending principles that violate globally accepted standards, and so those are the ones we're enforcing right now.
All right, what about loan apps or digital lenders that didn't make the cut? You know, what happens to those ones?
I'm sorry, they didn't make the cut.
And what if they still operate at this time?
They'll be operating illegally. And if they operate illegally, they'll be held accountable. For one thing, I think it will be difficult for them to operate optimally, because the understanding we have with Google is that in the absence of our approval, nobody can get on the Play Store. So for one, they won't be able to get on the Play Store. But yes, they have other Facebook and other sources online to operate. And if we find them, we'll certainly come against them and hold whoever is hosting them accountable to taking them down.
And definitely quite a lot of Nigerians are vulnerable at this time. Any kind of sensitization, to tell them, you know what, you don't have to go for these loans, even though we know you need money, because these loans the interest rates are really high.
Right, and what we say with respect to that is that, yeah, we recognize the vulnerability, but you're actually more vulnerable if you fall into the hands of those who violate the law. And so one of the reasons why we're putting it out and letting people know, and we have it online, you can go to our website to see who's legitimate or not. So borrow from a legitimate digital lender who the regulators know how to find and hold accountable. That way you're likely not to be a victim.
And definitely it's still early days for these digital lenders. Where do you see this industry in, say, 5 years?
I think it would grow. I think they've come to disrupt the traditional lending practices. But I think it's also new on all, and globally everybody is struggling with this. In fact, we're ahead. Kenya, India, some of them are learning from some of the things we've done. So I think 5 years from now, I think things would have settled a little more. Regulators would have gotten a better grip of this, and there'll be a lot more ethical lending.
Because I know definitely a lot of people are interested in these digital lenders, because they do, give out these loans,
especially
really
small.
fast.
I mean, loans that can happen very quickly. I remember that, the scope, the size of commerce is inexorably linked to the speed of commerce, the speed at which transactions can occur. If you think about it, look at what credit cards and debit cards do. It's unsecured lending, right? And so this is just another level that technology is taking us to. And it is the speed of commerce that determines the strength of an economy.
Right. Well, I guess we'll have to anchor it there. And hopefully, the digital lenders actually play by the rules, and the borrowers are quite responsible when taking these loans. That's what we're hoping for.
Thank you very much.
All right. Thank you so much, Mr. Babatunde Irukera, CEO of Federal Competition and Consumer Protection Commission. Thank you.
Thank you.
Yeah, so we'll take a break now. Still ahead, financial derivatives company forecast inflation for March will slow by 21.85%. We'll drill down on that next. You stay with us.